Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Modinomics 3.0 special edition of Market Today presented to you by ICICI Direct. Now remember, we're just on the Friday right before the budget week, and how the market setup has changed just over yesterday is something that you should take note of. Now, as of Thursday, up until 1 p.m., we actually thought that the markets were very sluggish. But beyond that, it actually appeared that the Nifty not only recouped some of the losses that it was incurring in the first half of trading action, but we also saw the markets inch up higher to 24,500, then to 24,600, 24,700 and even beyond 24,800 as well on the upside. And we do have a new fresh record high on the Nifty of 24,837. And that's all thanks to the IT stocks. The IT index itself hit a fresh record high level, and of course the entire space was abuzz with action. We are now just 200 points away from the historic 25,000 mark on the Nifty. And it possibly could be Infosys that could be the biggest trigger for pushing the Nifty towards 25,000 today after those robust Q1 numbers. Especially take note of how the ADR also of Infosys reacted overnight. That was up 9% in the overnight trading action in the Wall Street. Now, as far as the plenty of other broader names are also concerned, they will also react to their earnings. So Persistent Systems, Tata Tech, L&T Technology Services, South Indian Bank, Dalmia Bharat, JSW Infra, they will also be reacting to all of their results. Remember, for the week, the Nifty is already up by 1.2% so far. It's also poised for a 7th straight weekly advance. Now, the big question is, will, despite the muted cues that we are getting from across the globe, the markets have that inherent strength to go past 25,000 right ahead of the union budget? Well, we'll find that out over the next 1 hour. Joining in on this very special edition with me is Mr. Mitesh Panchal. He is the founder of miteshpanchal.in and he will track the technicals for us. Warm welcome to you, sir, and thank you so much for taking the time out for this discussion. Mitesh ji, you tell me, is 25,000 appearing on our screens today, and that's all thanks to Infosys? Is that a reality right ahead of the budget?
Good morning, Sakshi. Yeah, possibly right. And what you have marked in your opening remarks is very good. I mean, the IT pack is now coming back. And as you mentioned, Infosys ADR was up by 9%. So we are going to see a strong contribution from IT side. Not only that, but since last two trading sessions, if you look at the chart pattern of Reliance, that is also coming back. So I think Reliance, Kotak Mahindra Bank, HDFC Bank, and the entire IT pack, 25,000 is now a possibility. 200 points probably is what we can see throughout the day. And I am of the view that yes, definitely 25,000 before the budget is really a possibility. Reliance per se probably will contribute the highest.
Okay, got that. Well, let's also help our viewers understand the global setup. So overnight in the US, viewers, we did see that the benchmark indices, as in a sell-off in technology stocks, spread to other counters as well. So Dow Jones plunged about 1.3%. The S&P 500 and the Nasdaq dropped around 0.8% each. Even the US 10-year bond yield quoted at around 4.1%. Among commodities, we did see that the gold futures dropped back to $24, $25 a level, and also the Brent crude futures continued to languish around $85 a barrel mark as well. Equity markets in Asia too seem to be in a worried space. Kospi and Taiwan were down more than 1% each. Straits Times declined by about 0.5%. Japan's Nikkei was, however, flat in the early morning trading action. Now, as far as the flows are concerned, remember that the overseas investors have remained net buyers of the Indian equities for the 4th consecutive session as of Thursday. On Thursday, they bought stocks worth about 5,483 odd crore rupees. And we did see the domestic institutional investors, on the other hand, selling shares to the tune of 2,900 crores as of yesterday as well. Now, of course, there'll be a whole host of stocks that we will be keeping an eye out on, especially Infosys. Let me reiterate for all our viewers the kind of earnings that we saw right after the market hours yesterday. So the Q1 numbers displayed that the revenue guidance has been upgraded to 3 to 4%, and that's the big positive that we are looking at. Of course, the IT major reported a 7.1% year-on-year growth in the net profit as well. Revenue margins, they were all a beat on the estimates as well. The total contract value came in at $4.1 billion, which means the deal wins were very high. FCF, the free cash flow, also was very, very strong as well. Already up until in the run up to its earnings, the stock is up by 2.7%. But let's see how the stock really opens up in trade today. Let's discuss with Mitesh ji. On Infosys, what should be the strategy today, Mitesh ji? Mitesh ji, could you unmute yourself, please?
Yeah, sorry. So the best strategy is to buy in the opening remarks because the sentiment in the entire IT pack is very strong. As far as Infosys is concerned, we are of the view that today the stock has the potential to test 1850 or 1900 as well. So yes, in the opening remarks, one should not look at the price. For example, if the stock is up with a gap of 3 to 4%, yes, it's definitely a buy. And Sakshi, remember that after a very long consolidation and a very long frustrating range, the stock is coming out of it. I mean, yesterday in the intraday above 1740, we get a confirmation on hourly chart. So we do have a buy-side trade formation for our clients in Infosys. Not only in Infosys, but Wipro is also looking very promising as of now. Tech Mahindra is also looking promising for this as of now. So the entire space is buzzing. As far as Infosys is concerned, yeah, 1850, 1900 can be achievable throughout the day.
Okay, fair enough. So that's the view coming in on Infosys and the entire IT pack as well. Let me detail some other earnings reports also for you, Mitesh ji, to help our viewers really understand. But before that, let me reiterate all the brokerage houses reports we've got on Infosys. A slew of brokerage houses reports, upgrades coming in on Infosys post the earnings. So JP Morgan has an overweight rating with a target price of 1950, and they believe that the Q1 was a perfect foil to the poor Q4 earnings that we saw. It handsomely beat revenue, margin, EPS, FCF, expectations, as well as upgrading guidance with positive one-off revenues and margins as well. So they are positive in it. Bernstein has the most bullish target as of now. Outperform rating on Infosys with a target price that they have raised to 2100. They believe the strong beat on in 10 quarters across revenue and margins and EPS is something that they are bullish on. Even Jefferies has a buy rating and they have raised the target price to 2040 on Infosys, driven by the strong revenue growth of 3.6% on a sequential basis. That is ahead of the peers as well. So that's the kind of reports that are coming in on Infosys. Apart from this, let's also detail Mitesh ji, Persistent Systems and L&T Technology Services. These two IT companies also came out with the earnings yesterday. Revenue for Persistent Systems, improved by about 5.7% to 2737 odd crore rupees. For L&T Technology Services, there was a 0.8% year-on-year rise in net profit, and also the revenues that actually saw a 3% Q-on-Q decline, but a 7% year-on-year increase. How would you look at these two counters? What are the charts suggesting for these two?
Out of these two, I think what is looking promising is Persistent. If you look at the daily chart, stock has given a strong breakout above 3950, and since then stock is on a one-way run. Recently, stock witnessed a mild correction from 4800 level to the tune of 4500 levels, and finally made a bottom on 11th July at 4530. And since then, stock is on an up move. A bit of a resistance is faced at 4700. So stock has not 4900. So stock has not closed above 4900. But today, in today's session, we are of the view that stock will finally break above 4900 and enter into a magical range of 5200 to 5400. So yes, definitely at the current level, Persistent is a buy.
Persistent is a buy, and we are seeing the pre-opening rates come in already. Flat move right now on the Nifty, 24,798, with just about a 2 or 3 point downtick that you can see on the Nifty. This is in line with the Gift Nifty trends, which was indicating a muted start. But let's look at the stock of the day. Infosys, as to how that is opening up in the pre-opening trade in today's session. Remember, we are expecting that after robust set of earnings, this stock could be headed higher. 1851, 5.3% higher on Infosys in the pre-opening trade. Let's see whether this translates into the opening levels as well. Let's also pull up some of the other heavyweight counters within the IT pack. Let's pull up TCS. Let's pull up HCL Technologies. Let's also pull up Wipro, Tech Mahindra, something that Mitesh ji also highlighted, to see whether the momentum is spread across. Now, TCS is half odd percent down in the pre-opening trade. Let's again look at HCL Tech, a percent higher in trade. Let's also look at Wipro, and let's look at these two earnings heavyweight counters. Persistent Systems and L&T Technology Services as well. A percent uptick for Wipro, and let's also look at how Persistent is opening about half odd percent lower after it has missed estimates on the top line. Then L&T Technology Services also down by about 1.5%. Let's now pull up Reliance Industries, something that Mitesh ji was highlighting, that beyond the IT space, even the other heavyweight counters like Reliance Industries are now picking up some strength in action today. Okay, 0.3% lower, 3162. That's nothing to get worried about at all. Let's look at the FMCG counters. Remember, FMCG is another space that was bouncing back yesterday. So let's look at stocks like Britannia. HUL was something that was moving after a long haul, flattish with a positive bias in trade today. Let's also look at how the other counters are moving. Half odd percent decline for Britannia. Let's also look at how the pharma space is doing. Remember, some of the momentum was also coming back in the pharma space as well as of yesterday. So we'll look at how the pharma index is also trading at as of now. But let's also keep an eye out on some of the other counters that were in news. Let's look at Havells, for instance. After the earnings, the Nomura report suggested a target price of 1900. Even though Q1 margin miss was there on the weaker mix, they do believe price hikes and stable commodities should support the margins going forward. Let's see how Havells is reacting. It is already at 1900, the target that Nomura has, about a 2% higher in trade. Let's also look at some of the other counters. Let's look at SEAT, for instance. That came out with the numbers. Remember, it's the tire space that has been buzzing off late. And SEAT came out with the numbers where profits jumped 7% to 152 odd crore rupees. It's a half odd percent increase for SEAT, 2800, and the revenue was flattish with a negative bias of 1.2% lower in trade. Let's understand from Mitesh ji, where is he going to be keeping his eye out on when it comes to the tire space as of now. Mitesh ji, tire space, would you be bullish?
Definitely. And within the star space, if you look at the structure of Apollo Tyre, it is looking very promising. I mean, in the recent past, stock has made a high at 550, and then stock has struggled and made a bottom at around 518. After that, since last two trading sessions, actually, the stock is showing a heart of high bottom formation. So now we are of the view that the intermediate a strong resistance level of 555 will be taken over, and stock will eventually enter into a new trading range between 570 to 580. So that is what is looking promising. Apart from that, Sakshi, for today's trade especially, two sectors are looking promising. First is a reality and second is a cement. And within that, if you look at the chart pattern of DLF and overall reality, that is looking very promising. So I think for a day or two, one can take a swing trade in the DLF or in the overall reality at the current level. And as far as the cement space is concerned, I think JK Cement, the structure of JK Cement is looking very promising. So I think if you're looking for an intraday or probably a swing trade for a day or so, you should look at the entire reality space as well as entire cement space, as we have seen a very strong up move yesterday in India Cement as well. So I think now that space is coming back, and after a very strong consolidation as well, the DLF and the overall reality both are coming back. Apart from that, one stock which is also looking promising as of now is Titan. In the recent past, the stock has corrected and now it is up for a very strong upside. So one should also look at Titan.
Okay, DLF's, JK Cement, Titan, some of the counters that Mitesh ji is keeping an eye out on, and cement space, real estate as a whole also is something that he's looking at. Sagar Cements, after the earnings, is opening about 3.5% higher in trade. Let's also pull up Dalmia Bharat. That's another one that reported numbers, and therefore we have to see how the entire space is buzzing in trade. Sagar Cements, after that EBITDA improvement, is up by 3.5%. Dalmia Bharat is up by 1.5%. The cement maker reported a 0.7% increase in net profit to 145 odd crore rupees as well. But let's look at some of the stocks. From the banking space, South Indian Bank reported a very strong set of earnings of 45.3% year-on-year jump in net profit to 294 odd crore rupees. Let's look at how that one is reacting. It's a small ticket stock and look at how sharply it is opening, 4.6% higher in trade after that very strong set of numbers. Even the NII for the bank increased 7.2%, coming in at 865.8 crore rupees as of now. Mitesh ji, South Indian Bank for you, how would you look at the stock, and after this bounce, what would you do?
Yeah, so the South Indian Bank actually today it has crossed its immediate resistance levels of 27.50. As of now, it is closed at 27.75. So yes, with a stop of 25.50, one should get into the counter. One should buy at the current level. Probably the near-term target will be 30 and 32. Yeah, after a very long consolidation period, these small ticket banks are now showing a bit of a strength. So yes, definitely, South Indian Bank is a buy at the current level.
Okay, South Indian Bank is a buy at the current levels. Let's also welcome now Mayuresh Joshi, Head of Equity Research at William O'Neill India, now joining right in on the show. Mayuresh, warm welcome and good morning to you, and thank you so much for taking the time out for this discussion. Record highs have been greeting you, and I want to understand first up on Infosys post earnings, and we're already seeing the pre-opening action of about 5% uptick that we can see here. How would you look at Infosys post earnings, Infosys versus TCS, and of course the entire IT pack?
Morning, Sakshi. Morning, Mitesh. No, so two things. One, I think in terms of the results delivery that Infosys has given, I think much better, or rather significantly better than what a lot of analysts on the street were expecting on most counts, except the head count. So I think if you leave aside that parameter, the revenue growth that has come in, the EBIT margins that have come in, the guidance which has probably been up, is all testimony that Infosys probably feels that the worst is probably over. Our take was that second half might see some element of recovery for the sector as a whole. But looking at Infosys guidance and what the TCS commentary also indicated, that there are green shoots that are happening, and there is large expectations of stability both in terms of pricing as well as the general macro environment that will take place. I think the thing will only get better, assuming the commentary in the second half, as the rate cut cycle begins, and there is more orders and more ease for significant and important sectors like BFSI, retail, and manufacturing. So yeah, pleasant surprise. I think nobody in the street was probably of the belief that something like this can be delivered by Infosys. And therefore, I think mid-cap IT companies have delivered, large-cap IT companies have delivered, and the commentaries have been pretty strong as well. So I think it's probably looking at the revival for the sector as a whole. And it also terms of as a defensive bet, actually, where markets are largely overstretched, specifically the broader markets. And if there is volatility expected over the next few months, looking at elections across the globe, specifically the US market in the next few months, I think this becomes a perfect edge. Yeah, so pleasant surprise, the reaction to the stock says it.
Okay, got that. Viewers, the pre-market opening levels are settled and we could be looking at a record high opening on both the Nifty and the Sensex today, 24,853 right now, and 81,580 on the Sensex as well. The IT index as well. That is something that we will watch out for. Remember, yesterday it hit a record high, and yet again it looks at opening at another fresh record level, buoyed by Infosys, which is now indicating a 4.9% higher opening at 1844. Wipro, HCL Tech, LTI Mindtree are some of the other names that seem to be ticking higher within the Nifty as the top mover. So the Nifty IT index will be another day for this one to perform in trade. But I'll also ask you, Mayuresh, on Tata Technologies, as to how are you really looking at the company post earnings this time around. Another muted set of earnings that have come through, but the management commentary is that they're already looking at some green shoots emerging. They're bullish about the demand environment as well. They managed to strike about 5 strategic deals, so they are bullish on both the auto as well as the aviation space which they cater to. How are you looking at the space, or will there be some more patience that one needs to have before the stock performs?
No, so I think the management commentary is doing the tricks, actually. So what is happening is if the results are largely muted or flattish, the expectations of management, the management take in terms of the environment probably improving, And therefore, that dynamic itself having a huge significant take in terms of their own micro development as far as earnings are concerned is something that is propelling the stocks not to fall. Again, I think a large underlying thread has been for most IT companies, management commentaries, as I said, is a pleasant surprise in terms of at macros, how they're looking at pricing, how they're probably looking at ordering. And all these aspects put together, as you probably assume, the second half expected to get better for the sector as a whole. The markets will start factoring that in, assuming that they've already started seeing green shoots from this quarter itself. So to that extent, yes, uh, a little bit stretched in terms of valuations, but my take is that if green shoots are emerging, the sector will do well. Not too much of a fall that can get expected in Tata Tech. Maybe the stock might consolidate, but valuations a little bit of a concern. But if they're able to deliver better than the industry, specifically in the segments that you rightly pointed out that they cater to, in the next few quarters as EV mobility gets more traction and aviation comes back very, very strongly as well across the globe. I think these sectors with a lot of content that is expected to come through from the technology that Tata Tech probably deploys can also be something that can have a re-rating in terms of earnings. So it might go through a consolidation phase, but yeah, generally the sector has a lot of tailwind is now favoring.
Absolutely. So the tailwind is favoring. Before I go back to Mitesh to understand his, stock ideas, I want to also understand from you, Maheshji, right ahead of the budget, are you strategically positioning any of the stock sectors where you believe that beyond the budget there could be some sectoral rotation that will take place? We're already seeing signs of it. Railways, defense, they were under pressure and profit booking as of yesterday. It was the underperformers that are now stepping up: IT, FMCG, pharma. How are you really looking at beyond the budget, and before it, are you doing any changes?
I mean, we are anyway very, very specific in terms of our sector picks. And therefore, I think a large part of the overvalued market, broader markets, and we've been talking about this ad nausea, defense, railway stocks, a few of the capital goods stocks. Valuations are not tenable, actually. I mean, you can't have stocks trading at 100 times, 120 times, 150 times forward multiples. And for those multiples, the stocks have to compound their earnings in excess of 40-50% every year. And that is just not possible, assuming their fixed asset capacity at this juncture. And therefore, I think there will be some element of sector rotation that will happen. Obviously, the structural story continues. There are no two ways about it. Defense order books are full, power order books are full. You've probably got engineering order books which are full. The margins are decent. They're executing well. However, I think earnings valuations as well as late pivot bases as we see it at markets in India are just not tenable. So to that extent, I think the classical defensives as a perfect hedge against this sector. Some of the IT stocks come back in flavor, pharma comes in flavor, a few of the FMCG stocks come in flavor, become a hedge for these highly valued sectors. But within these sectors as well, I think there will be some pockets, as I said, waste and water management as an example. You've got your pipeline companies, you've got your logistic players as sub-sectors and sub-themes where government capex can have a compounded effect in terms of their earnings potential over the next few quarters. So I think you'll have to look at sub-themes within the larger themes.
Okay, we'll come to you for specific stocks within these key sectors that you're looking at. Markets have opened 24,853. That's a flattish with a positive bias opening that we are seeing on the markets. Let's look at Infosys to see how that has reacted in trade. 4.9% higher at 1844. No, about 3% higher. Now about 1813 now. Quickly, there is some pressure that's building up at the higher levels on the markets. Even though we've seen a record high opening for the markets today, you actually saw a quick profits being taken off at that higher level. Only the IT and the FMCG sectors are up into the green. Rest of the space is down deep into the red as well. So be it the metal space, oil and gas, private banks, financial services, auto, pharma, consumer durables, they're all down in trade today. And about 0.5% in downtick to almost 1% downtick is what you're seeing across the sectors. What's holding up on the Nifty? Infosys 3.3% higher, LTI Mindtree 1.2% higher, Wipro 0.7% up, HCL Technologies up by 1%, Tata Consultancy Services about 0.7% higher. You also have Bajaj Auto, Britannia and Tata Consumer Products, and HUL also showing us some ticks on the higher side. F&O movers, you have Chambal Fertilizers and Chemicals about 4% higher. Infosys, of course, 3.3% up. Emphasis, L&T Technology Services, Birla Soft. These are the names that are still pulling up in trade. On the downside, you have Polo Tires, Persistent Systems, post earnings, MRF. You also have Bharat Electronics, Trent, that's under pressure within the F&O space as of now. Let's look at some of the other stocks which are reacting. Let's look at the broader markets, if there is anything that we can point out there. We have VST Industries, that's 9.5% higher. We have MTNL, remember the telecom space has been buzzing. It's another 7.5% higher in trade today. Then you also have stocks like Surana Solar, that's up by 5%. You have those weak names which we hardly discuss coming back. Remember, the insurance space has been buzzing. So today, Go Digit Insurance is buzzing in trade as well, about 5% higher in trade. Mitesh ji, coming to you. How are you looking at the opening? And what would you do with Infosys after this level?
Yeah, so opening is fairly good. I mean, there is no big cut in the opening, so I mean, it's comfortably okay. Looking at the kind of stocks which are moving right now, I mean, I'm comfortable because Asian Paints is hitting a new high. Your RBL Bank is hitting a new high. IT is hitting a new high. So probably, yes, as we progresses throughout the day, probably we can inch higher. So I will comfortably buy the index as of now at this point of time. And as far as cash stocks are concerned, I think what is looking promising is AIA Engineering at the current level at around 42.85. So that is looking promising. From the F&O space in the initial trades, what is looking promising is Exide Industry at 556 and Siemens at 7,139. So two stocks from F&O space, one from cash segment, AIA Engineering is looking promising in the initial trades.
Okay. South Indian Bank opening about 3% higher. Those robust set of earnings propelling the stock higher in trade today. Apart from this, Indus Towers is about 0.7% higher in trade. So beyond that IT space, only the telecom space is throwing us some action on the positive side. Even though when we look at the entire market setup, even the broader markets, they are now slipping away. So the Nifty Mid Cap 100 index is now down by about 0.8%, and the small cap index is also down by about 0.6% in trade. So the broader markets are now looking at some pinch. JSW Infra down by about 5 odd percent. Dalmia Bharat after earnings is down by a percent in trade. Persistent Systems after earnings is down by 6 odd percent. You have CEAT, that's down 0.6%. Reliance Industries 3162, about 0.35% of a downtick on this one. But Britannia is holding up about 0.9% in trade. ITC is now 0.4% higher. You also have Tata Consumer Products that's flattish with a positive bias right now. Let's get in Mayuresh ji to help us understand and decipher the market moves currently. Broader markets clearly under pressure. Even as of yesterday, Mayuresh ji, when we saw the market scale, the Nifty scale to newer highs, it was only a far few between large cap stocks that were pulling the index higher. But underneath the surface, there were a lot of stocks that were seeing sharp profit booking. Is that going to be the flavor and the tenor of the market going forward from here? Broader markets, could they see a sharper move on the downside?
So they have also moved in a non-linear fashion, Sakshi, to be very honest, over the last few weeks and months. So there is element of profit booking that is happening just before the budget announcements, and rightfully so. I think a large part of the market is overheated as we speak. And in fact, at William O'Neill, we were doing a comparative check of India among the other emerging pack, including Korea and Japan. So I think if you leave aside India and Taiwan, in terms of valuations and where a lot of stocks are staged in late stage basis, a lot of the markets are undervalued. Obviously, I think there are a lot of macro reasons for that. But purely going in terms of the construct on what the budget might have to offer, I think there is element of volatility and profit booking that is expected and is happening as we speak. Now, what will really transpire in the budget when it comes to specific allocations, our own take is that, and our note will be out very, very shortly as well, that we will carry on the path of fiscal consolidation. The capex spends when it comes to infra manufacturing will still continue in a far robust fashion. There will be allocations towards the rural economy as well. The rural economy has been under tremendous distress for the last few quarters. Everybody is expecting a good monsoon, which it should be. Generally, I think there has to be some element in terms of getting this economy out of the shambles that it is at this juncture. And therefore, I think plus good allocation happening towards the rural side, some element in terms of tax consideration, SOPs when it comes to the salaried cards. I think this is what the government will probably do. So I think expecting a well-balanced budget to probably come out, some more clarity happening in terms of the capital gains as far as either the duration of the tenor is concerned, which is very arbitrary at this juncture as we speak. And therefore, I think not expecting too many negative surprises from the budget itself. And therefore, the markets will revert back to mean once the budget is probably done and dusted and focus back on earnings, where the base case scenario is that earnings should grow at 12%. So I think certain pockets where earnings will grow at a decent pace will remain in flavor. There will be sector rotation, as we spoke in the opening comments as well. And that would largely be the favor of the market. So yeah, I think not expecting too much of a negative surprise from the budget, not expecting a structural downside into the market, but you have to remain sector and stock specific.
Right. So, how would you advise viewers to really go about those runaway sectors, defense and railways? Second day in a row, we are seeing about downtick across the board on the defense and the railway space again in trade today. Stocks like HAL, Cochin, Mazagon Dock, GRSE, they are all down in trade today. Even across the railway space, RVNL, IRCON, IRFC, these also, like you said, that non-linear fashion is what they have actually moved in. So, some bit of a correction was warranted, is happening. But should one use these dips to add to these stocks, or is there, one should wait for some more correction to really happen here?
So I was always of the opinion you should wait, and in fact, you should have some element of partial profit booking done as well, because there is no harm of booking money in overheated sectors. Everything's going right for them at this juncture, Sakshi, and there is nothing structurally wrong per se. So all of us on the market and the street are aware of the fact of the strong order which they carry. More orders that are expected there in the next few quarters. There will be a significant allocation in the budget as well. The margins at which these orders are coming are decent. They're executing well. Look at the numbers that HAL and Mazgaon posted last quarter, right? So there are no complaints as far as earnings delivery is concerned as well. But the sheer fact that they've run up too much and where the valuation comfort is just not there. Because even if you assume the best case scenario over the next 2 years in terms of their earnings delivery, I think the stocks are largely pricing that in. Now, if there is some exceptional that these guys do, which is just not possible, assuming they're fixed assets, and there is some element in terms of how much turnover your assets can generate, I think there is a limit in terms of the best case scenario that can be played out. And therefore, I think partial profit booking is something that investors can genuinely do. Wait for declines if investors have not got in significant ones like that, because there are structural tailwinds for the sector as a whole. But yes, till that point of time, I think focus on sectors where earnings growth will be decent and where valuations and late stage bases have still not come through for these sectors. For these sectors, yes, I think some element of partial profit booking is warranted.
Okay, let's get in Mitesh ji into the conversation again. Mitesh ji, I'll bring up the FMCG stocks for you. Stocks like ITC that are now taking higher, 0.5% at 472 odd levels. Britannia is up, HUL is up, Nestle is up in trade. Tata Consumer Products is up in trade as well. FMCG is the only other index beyond the IT that is showing us some upticks. Is the market turning defensive? And within that and within the FMCG space, where would you keep your focus?
So what is looking promising within the FMCG space is HUL clearly, because if you look at the quarterly chart of HUL, I mean, for multiple times, stock was unable to cross that 2700 to 2800 mark. To be very precise, 2769 is the strong resistance or the steep resistance. And now the stock is planning to cross that. So probably there is no surprise that we will see one of the biggest wealth creation in this stock for the next 3 to 6 months to the tune of 20 to 25%. So yes, the eyes are on HUL as far as FMCG is concerned. And yes, you're right. I mean, now as the market is going volatile, and now majority of the high beta stocks are at an elevated level. So focus will shift towards quality large cap as well as FMCG and IT stocks. That is what the indices are indicating.
Okay, so that's the entire FMCG space for you as well. We'll come back to FMCG stocks, but Mitesh, Mayuresh ji, before we let you go, we have to ask you on Reliance Industries as well. Today in the evening, we will get the earnings of Reliance Industries. Stock has shown upticks right ahead of the earnings in this last quarter. There are a slew of updates that are happening. Expectations on the Geo listing, that's been the big buzz now. How would you look at the earnings? What looks, what is your own expectation, and how should investors really look at this counter now?
No, so the retail businesses should hold up, Sakshi. Obviously, there is, as you rightly pointed out, a huge buzz in terms of the demerger of the Reliance Jio business from Reliance. The new age businesses are shaping up well. So let's hear commentary around that as well. And the core business that we're probably talking about in terms of the oil to chemical business, that should have a steady state showing on a quarter-on-quarter basis. Obviously, I think with expectations of the peak stock that Reliance has, it should be relatively better. Reliance Retail should have a decent show. Jio should have a decent show, in my opinion, as well. Upstream has started showing signs of resilience, like its competitors in the public domain as well. And therefore, upstream also should largely remain in favor as we head into the next few quarters. With the new businesses and the capex that is happening in a calibrated fashion, not too much of leverage building up to the balance sheet as well. And therefore, any positive developments in the next few quarters in the management commentary is going to be taken very positively by the street. And therefore, I think the ROE should expand for all these four businesses put together. Obviously, I think the Chinese scenario and the environment and how the spreads are, specifically when it comes to the downstream products, as far as the petchem business is concerned, is something to be watched and observed. But there should be some element of recovery that happens even in this leg of the business as we head into the next few quarters. So if I peg out the next couple of years, I think there are a lot of positive developments that can probably take place and shape the earnings for a behemoth like Reliance. So yeah, I think continue to remain optimistic on this one. Clear disclaimer, we continue holding this stock in our global portfolio.
Understood. Well, on that note, thank you so much, Mayuresh, for being with us on this show and helping us with all your wonderful insights. Truly appreciate your presence always, week on week. And we will now see you right after the budget to get the sense of how the budget will be impacting the markets going forward from here. Thank you so much for being with us. Viewers, we'll continue our conversation with Mitesh Ji now. Several of the other stocks that we need to take his view on. Remember, the broader markets are still throwing a lot of momentum in the stocks, like VST Industries is up by about 11% in trade. Telecom Engineering is up 10%. We also have stocks within the telecom space that are buzzing. MTNL, Tata Tele, Indus Towers I had mentioned, that's up and about. Let's discuss first this telecom space with you, Mitesh Ji. How are you really looking at this new momentum that is coming up, fresh momentum that's coming up across the board in the telecom space, and what looks promising to you within this space?
Within this space, undoubtedly the only stock which is looking promising technically is Bharti Airtel. If you look at the chart structure of Bharti Airtel, I mean, after a consolidation, now the stock is up for a very strong upside because the kind of consolidation which has went through and the kind of correction which has went through, I think now it's a time to accumulate it. So above 1495, 1495, we are of the view that the stock will enter into a new trading range. So we are just looking for that level to cross on a 15 minutes or in a half an hour chart. So once 1495 is taken over, probably the stock will enter into 1500 and 1600 marks. Second thing, Sakshi, as you know, since last 2 or 3 trading sessions, MTNL is buzzing. The only request to the viewer is that if you're getting in such a high beta counter, make sure that you will exit at the right time or you follow strict stop loss discipline. Because such counter after, I mean, the tendency of the counter is to deliver 50, 60, 80% return in just a matter of 1 or 3 months. And then probably for a long period of time, they went into consolidation. So be very careful with these kind of stocks at this juncture. It is extremely important to maintain cash in the portfolio as well as to maintain discipline. So please be clear with these kind of approach.
Okay, got that. But you know, Mitesh ji, also something that I was discussing with Mayuresh ji, and I want you to also give a sense to our viewers as well. There is this fear lurking in the markets among investors that we have had a one-way run-up and beyond the budget, even if we see 25,000, probably this could be the peak and we could see a deeper correction in the market. Now, you did say that structurally the trend looks positive in the markets, but what happens below the surface of the Nifty? What happens in the broader markets? Are these going to be the pain points? Should one book out of the broader markets, mid and small caps, and deploy money afresh in large caps? Would that be a safer strategy?
Yeah, Sakshi, you raise a very brilliant point at this point of time. See, the first and foremost thing which one should understand is that whenever market is at the top, today the top is 25,000. Tomorrow, probably after a year or so, or after 5 years, we may talk about 35, 40,000 as a top. Okay. At the top, please, I request you to do three things, all the viewers. First is that sit on a sizable cash. The definition of the sizable cash is between 30 to 40%. Second, it's a time to book the profit. We all are investing in the market just to ensure that our portfolio will grow and our money will grow. But in the market, if you're not booking the profit or probably the loss at the regular interval, probably everything is on just on a piece of paper. So yes, profit booking is advisable. Second thing, to sit on the cash is also advisable. And those who are sitting on the sideline, waiting for the index to correct, and since it is not correcting, and it is a very frustrating time, Sakshi, believe me, because a lot of our investors are calling us, telling us that the market just need one or the other reason to move up. It is not correct. If you want to participate, if you're sitting in a sizable cash, and if you want to participate, just participate by investing 10 to 15%. Once the market will correct, believe me, Sakshi, in our market, there are plenty of opportunities will come and knock your door. The only one thing which we unable to do is to wait patiently. So as of now, wait patiently. There is no hurry to participate. Book the profit, sit on the cash, opportunity will come, knock your door. At that point of time, just buy. For an example, if you're telling some, that's what we are getting. We are telling the clients to buy Asian Paints, Kotak Bank, and HDFC Bank, but they are not ready to buy it because they are not exciting stocks, right? So that is the problem of the market, that people need excitement and return both together, and sometimes it is not possible.
All right, so that's the wise advice coming for all of you viewers, a strategy that you should be adopting when the markets are near their top or at a high after a one-way rally. What is the ideal strategy that you should be having? Patience is key. Book out some of your profits, sit on cash, and there will be opportunities. Structurally, the markets are in an uptrend, but there could be some dips that would actually offer you better entry points into the market. So book out and sit on profits as of now, and sit on cash as of now. That's the kind of view that's coming in. Let me bring up some more stocks for you, for your view, Miteshji. IRIDA is something that I wanted to discuss with you. After those 3-4 sessions of continuous decline, the stock is bounced back again in trade today, about 6% higher on IRIDA today. The stock is at 272. In hindsight, what the opportunity was given in the last 2 or 3 days, do you think that was a great opportunity? Is the stock right now again indicating an uptrend from here on? How would you advise viewers?
No, Sakshi, now what I feel is that those stocks which have run up so smartly in last 1 or 2 years are now in the classic cycle of distribution. So you see a correction followed by a sharp move, again a correction followed by a sharp move. So this is a classic example of a distribution. So IRDA, I will consider this up move or probably the last few trading sessions move as a classic distribution, and probably now the smart people are booking the profit. So one should not chase this kind of a momentum, rather than that, try, if you have, for example, 100 shares, try to book profit in 25, 30 or 40 shares. So all these patterns, for example, in case of an REC, PFC or BAIL or all those stocks, I mean Masgao, whatever upside you see for from now is should and must be used for exit and not should be for buying.
Okay, got that. So that's the view coming in on renewable energy stock like IRIDA and several other stocks from the defense pack which have had a one-way run-up as well. What else is buzzing? Within the broader markets, there are some newer names that are making a comeback. Omkar Specialty Chemicals, that's up by 5% in trade today. You also have Apex Frozen Foods, that's up by 5% odd. Then you also have very far and few between stocks that we should be discussing on air. Those are the stocks that are buzzing. We've already marked IRIDA and South Indian Bank. Kalpatru Projects International, that's up by about 5% in trade. So these are some of the stocks within the broader markets that are making a comeback. Let's again see What else can we discuss with Mitesh ji right now? Mitesh ji, again, auto ancillary names is something that I wanted to discuss with you. Remember the last time when we were discussing, it was all about how Maruti was rallying, and we discussed stocks within the four-wheelers pack, two-wheelers pack as well. Auto ancillaries have actually been better performers. Something like Samvardhan Motherson was again rallying in trade yesterday. Stocks like JBM Auto, Jamna Auto, Suprajit Engineering, maybe even Swaraj Engines after that earnings update was also buzzing in trade. Auto and auto ancillaries, how would you approach?
So I think now in auto and auto ancillaries, Sakshi two trades are available within the large cap space, both long and short. So now this is the only sector where you can take long and short both together in an auto space as far as the large cap is concerned. So you can go long in Maruti, you can go short in Hero Honda Motors, because those stocks which have run up quite smartly in last, say, for an example, 2 or 3 quarters from the large cap space is looking tired as of now, and probably a profit booking can be witnessed in those stocks. Apart from that, as far as the mid and small cap space is concerned, there also you need to be very selective, as you have pointed out, Swaraj Engine. So now I think that stock is looking promising. Even Cubins is also looking promising at the current level. So as far as the auto space is concerned, in large cap, you have both long and short opportunities. As far as mid cap is concerned, you need to be extremely selective.
Okay, got that. Remember the entire tea coffee space, we've consistently talked about this over the last few weeks. Today it's BST Industries that's now up 14% within this pack. And beyond that, Dhunseri tea. You also have Norben tea, some unusual names that are also pulling up in trade. Paper and packaging stocks are higher in trade, again in trade today. So something like an Orient Press. We also have Gujarat Rafia Industries that's up 10%. Very rare names that we discuss over here. JK Paper is up by 1.5%. You have Andhra Paper, Kokuyu Camelin, some ticks higher coming in. And the railway space is now again showing some momentum on the upside. So you have Railtel, that's up 4%. You have RVNL, that's up 4%, Ircon that's up 3.5%, Rights that's up 2.6%, IRFC up 2%, Texmaco Rail again 1.6% higher, Titagarh Rail about 1% higher in trade. Mitesh ji, of course these sectors have been runaway sectors, but we are right ahead of the budget, and budget again there is a huge expectation, could probably detail probably a higher allocation for the railways, modernization, and could this be a good play right amidst the budget for all of those traders who may be looking at the railway space right now?
Probably yes, but within this space, what you have to work with is FNO counters only, because in the cash counters you don't have a leeway to hedge. So as far as the budget play is concerned, you can go long in IRCTC at 1016 odd levels, and you can buy out of the money or at the money put as well. So you can enter into this trade with a hedge. As far as the cash counters are concerned, the hedging option is not available. So yes, as far as IRCTC is concerned, technically above 1000 now the stock is showing a strong promising, and we are of the view that probably sooner than later stock will trade between 1080 to 1100. So IRCTC one can go long with a proper hedge at the current level with respect to the budget play. In next 2 to 3 days, stocks can deliver a very strong return.
Okay, got that. You know what else is pulling up in the markets beyond the IT and the FMCG pack? It's the PSU banking story that's now looking positive. Central Bank of India 1.8% higher, Punjab and Sind Bank up 1%, UCO Bank, Indian Overseas Bank, Canara Bank, PNB, across the board slight ticks in the green are coming back into this space. Even in the private banking space, HDFC Bank is flattish with positive bias. You have Kotak Mahindra Bank also that's inching slightly higher in trade. So the banking names are again coming back. Let's discuss PSU banks with you, Mitesh ji. Are you finding any confidence in any of the stocks within the PSU banks which can be taken as a trade now?
Yes, definitely. Before 3 days, you have seen a very strong rally in the PSU stocks, especially Bank of Baroda, State Bank of India, PNB, and Canara Bank. And post that, we have seen a mild correction. So we are of the view that now, again, the entire space will come back on the surface. So within that, our top picks technically is State Bank of India and Bank of Baroda. We are of the view that now the State Bank of India and Bank of Baroda is up for a very strong upside. As far as Bank of Baroda is concerned, we are looking at least 5 to 7% upside from the current level. So 270 to 75 is what we are looking at. And as far as State Bank of India is concerned, what we are looking at is probably around 8 to 10% off an upside from the current level. So the levels of, for example, 950 or 980 is achievable from the current level.
Okay, got that. So that's the view coming in on the PSU banking story as of now. Let's also discuss one more space amidst the budget theme, and that is the fertilizers and the chemicals theme, sir. Mitesh sir, today in the FNO space, Chambal Fertilizers is taking higher. I remember, I think last time we had discussed even Deepak Fertilizers, which you had pointed out too. Again in trade today, that's up by about 0.6%. How are you really looking at playing the entire fertilizers and the chemicals theme amidst the budget?
Yeah, absolutely. That is the space which one should look at. And as you know, Sakshi, we have also released a special report on the specialty chemicals. So, Balaji Amines, previous specialty, Punjab Chemicals are the three stocks which we have recommended, out of which Privi has already hit the target. So, this space is looking extremely positive. As far as the fertilizer space is concerned, we like Deepak Fertilizer. Above 750, the stock is showing a very strong promise, and probably the stock will enter into a new trading range between 850 to 900. Apart from that, Sakshi, with respect to the budget, even sugar space is also looking promising. So
Yeah.
if you see off late in sugar also, there is a momentum since last two trading sessions. Probably today, tomorrow, we will see a very strong upside in sugar counter as well.
Okay, got that. So sugar space is something that we should definitely keep an eye out on. Anything specifically that you will look at within the sugar space, Mitesh sir?
Two stocks. I mean, we have already recommended four stocks in this space. We come out with a special report. So, as a disclaimer, our clients might have direct or indirect interest into that. So, from the FNO space, Balrampur Chile looks promising. 448 is an intermediate hurdle. Once it crosses, probably stock will fire and enter into a new trading range between 480 and 490. And within the small space, that is a smaller ticket stocks, Renuka sugar is looking very promising above 49. So once the stock will start trading above 49, probably 55 and 60 is what we are looking at.
Okay, got that. So those are the sugar space stocks that you should be keeping a keen eye out on. Viewers, barring just about 10, 12 stocks on the Nifty, rest of the space is now in the red. Of course, it's the IT names, it's the FMCG names and some banking names that are still holding up in trade. Adani Ports also about 0.3% higher in trade. Within the FNO, Exide is moving up now about 1.8% higher in trade. You also have Cummins India that's buzzing in trade. What's your view on Cummins India, Mitesh ji? Anything that technically you'd like to highlight for all our viewers right here?
Yeah, so I think if you look at the chart pattern of Cummins India, recently just now on a 5 and 15-minute chart, the stock has given a strong breakout above 3,800. Stock is trading at 39.90, 3819. So now we are of the view that going forward, stock will enter into a new trading range. For the intraday target, one can initiate a trade with a stop of 3,800 for a potential target of 3850, 3060 for the day. So yeah, that is looking promising.
Okay, got that. Mitesh ji, now before I let you go, we have to understand from you any budget focused stocks that you can highlight for all our viewers. One or two of stock ideas that you can talk about as budget stocks, sir.
Yeah, so budget stock, as I said in my opening remarks, I think reality stocks are looking very promising. Within that, you can eye at the DLF, and cement is also looking very promising. Within that, you can eye at JK Lakshmi Cement. So we are of the view that these are the two themes or the stocks which probably you can buy as a swing trade for the next 24 or 78 hours.
Got that. Well, thank you so much, Mitesh ji, for being with us on this very special edition and sharing all the pearls of wisdom that you always do with our viewers. Truly appreciate your presence with us on Business Today Television. Viewers, we are seeing that the Nifty is down about 60 odd points right now, 24,741. So we did hit that all-time high level in trade today of 24,854, and from that we are almost 100 points lower from that tick that happened in the morning opening session as well. But because that's the entire broader market is actually seeing the pressure, barring IT, FMCG, and some gains that can be seen on the PSU banking side as well. There are some names within the broader markets that continue to hold up. Railways are seeing a buying action back again. So stocks like Irida that was down and out are again showing some action. But you have to be extremely cautious at this point in time. Like both our guests, Mayuresh and Mitesh ji, have highlighted that this is a time to probably look at booking out some of the profits from runaway sectors, sit on cash. There could be some good opportunities for you to re-enter into the markets. So right now is probably a time that you should wait by patiently into the markets to see where the opportunities are coming in. We'll wrap it up at that on this morning edition. But do stay tuned as action will continue on your screens on Business Today television throughout the trading session. A whole host of earnings conversations will follow, and then I'll be also back at 12 noon to help you understand all the stock related queries that you have. And of course, on the closing action, we will be detailing for you what next should you be keeping an eye out on from the budget week, as well as far as the strategy on markets are concerned. So stay tuned. The action continues on the other side.